some clarity from the management. The company in focus is Borosil Renewables. Now, China has cut the tax rebate for manufacturers of PV products from the 1st of December. The rebate has not been entirely taken away, but it's come down from, I think, 13% to about 9%. To discuss the implications and what this means for the Indian renewable space and the solar value chain, we have with us Pradeep Kheruka, Executive Chairman at Borosil Renewables. Mr. Kheruka, thank you very much. Great to have you on. You know, before we talk about the China rebate, there's a fair amount of duty action that's happened here as well, right? The basic customs duty that India has imposed, that's already come on stream, 10%. And earlier, in our earlier conversations, you did say that with this BCD coming in, it should give you some relief. Prices should start moving higher. There's also some talk of, I think, anti-dumping duty. So let's discuss the India duty action first and what this has meant for the business.
So the India duty action is more than anything else an indicator that the government of India means business. Insofar components are concerned, they had already signaled their strong interest in developing an Indian ecosystem for the manufacture of solar modules by imposing a basic customs duty of 40% on the import of fully built-up modules and 25% on the import of solar cells. This is going back now nearly 2 years. What they have done since then is that they have also imposed a basic customs duty on the import of solar glass. An anti-dumping duty has been imposed on the import of aluminium. And we are now currently looking at an anti-dumping duty to be imposed on the imports of solar glass on top of the basic customs duty. Therefore, I think the most important, there are two things. One is that the government is signaling an intent to help local industry to develop away from the effects of artificially low prices, in the shape of dumping.
Right.
Now, the second aspect of anti-dumping duty, which is very important, is that the government has proposed a minimum import price. So that means no matter how low the Chinese producer goes with his price, the difference between that price and the target price set by the government has to be filled in by means of duty. So therefore, what they have been doing so far, for example, when the 10% and basic customs duty was announced on the 23rd of July, by the 7th of August, they had already reduced their prices to India, FOB prices by 15%. So they go on reducing their prices. At this moment, they're probably selling glass at the price of the raw material and perhaps a little bit of the energy that is needed to convert raw materials into glass. So with the minimum import price, their ability to dump will be severely curtailed.
So, sir, that's what we are, sir.
Yes.
Yeah, that's what we're trying to understand, that at a ground level, how much of a help has it been for solar glass? What is this minimum import price right now, and what would be the prevailing market prices? And sort of what does it mean for you in terms of pricing? Have you been able to take any hikes at all with some of this duty cushion coming in now?
Actually, because they reduced their export prices, they sought to equalize that. But what did happen in the quarter from July to September was that the freight rates, which had earlier dropped to a low, rose again. So from $600, they went to $2,000, $2,400. And when that happened, then, of course, the delivered price rose, and therefore we were able to get a better realization in that quarter. Freight rates seems to have stabilized and slightly moving down again. So the landed price of the solar glass is likely to go down as well, in which case we'll have to match it. But in the meantime, since the Ministry of Finance is sitting on a proposal given by the Ministry of Commerce for anti-dumping duty for provisional implementation of a provisional duty, if that kicks in, of course, again, there is going to be an improvement in the selling price. So
Kheruka,
that is really the lay of the land.
Yeah. No, and that's very helpful. So one more layer of duty expected, right? You would expect that
Yes.
to come. The ministry is considering it, as you're saying.
Yes.
You know, from an investor perspective, Mr. Kheruka, and maybe an unfair question to you since you're running the business, how should we look at it? You know, some say, well, this is an industry, if there were no import, if there were these duties were not present, I mean, competitively speaking, I mean, it's tough out there, and you'd agree, right? We've spoken about this over the last couple of
Yes,
years.
yes, we have.
So, how should one? And of course, now there's a change in sort of geopolitics. New administration in the U.S. They're also expected to increase tariffs, etc. So, just address that briefly, and also tell us in solar glass and modules. Is there overcapacity in India? Is there what's the situation like?
We are hopelessly under capacity in solar glass.
Okay.
Solar modules have risen from 15 gigawatts of capacity to 75 gigawatts of capacity already today. And the market is booming for solar modules as never before. There is another 75 gigawatts of solar module manufacturing capacity which has been announced. The total availability of glass today, as we stand, is about 16 gigawatts. So there is already a requirement for more solar glass in India than we have. So there are lots of projects for nearly 50 gigawatts which are on hold. They are on hold because people like us, who are the prime movers, the first movers in the business, are not finding it competitive to be able to sell our glass. I also want to deal with the word competitive. See, competition means somebody can do something better, lower, cheaper than you, and then he has every right to be able to sell at a lower price than you. The fact of the matter is that they are not competitive at all. They are subsidized. We are more efficient than the Chinese in terms of glass making. We have a lower cost of melting. We have a higher utilization of machines. We get 280 tons of glass from one production line. They get about 220. We are getting 1,200 kilocalories we spend per kilogram of glass melted. And it costs them about 1,680 in the furnaces that they supply to India. So therefore, by no stretch of imagination are they competitive. They are not. We would say that Indian industry is competitive, but if the government of China is going to subsidize the export prices, then there's little that we can do. That is what they have been doing around the world, by the way, for not just targeting India.
Yes.
And it is in recognition of that the government decided to import certain duties and certain other non-tariff barriers like ALMM, etc., for solar modules. And our understanding is if the government is considering to make these measures applicable to solar glass and other components as well. So I believe that the government has recognized it's not a question of Indian industry not being competitive. It's a question of Indian industry being targeted by predatory pricing, and then the need to develop Indian industry, which is now squarely felt by the government of India. And so I think we're moving in a direction where I'm personally quite hopeful that all necessary measures will be implemented to give us a fair level playing field. See what's happening with solar modules. Now, the largest module manufacturer is earning 100 crores profit after tax every month. So when we have that kind of profitability going, then obviously you're going to spur manufacturing in India. And why should we not manufacture in India? We have all the raw materials. We need to import absolutely nothing. We have highly skilled manpower. There is no reason for this product to be imported at all. So it is the only people who might be complaining are the users of the glass, because obviously it would they have to pay a little bit more for the product. It would hurt them, but by no means would it make any kind of dent in their profitability. It would just shave off a little bit of a couple of % from their profitability, and that's all. Nothing more than that.
Mr. Kheruka, sorry, Mr. Kheruka, absolutely, point taken. You, just to clarify, you said 17 gig, what are the modules? 17 more has been announced, 17 gigawatt.
One second. Module manufacturing capacity existing in the country today is 75 gigawatts per annum.
Correct.
It is going to go up to 150 gigawatts per annum within the next 2 years if everybody who has announced capacity comes up.
Got it.
Having said that, the capacity for glass today, operational, is about 16 gigawatts. Now, if we look at all the announcements already made by various players, including money that has been sunk in, we can look forward to another 50 gigawatts of glass coming in to the country. So we are all up and running, waiting to launch production in India, and everything is ready. But we just need to have support. We have to have support to make us viable.
Yes.
And that support seems to be forthcoming.
Yes.
We have to wait till the Ministry of Finance takes a decision and,
Right.
and they decide what they have to do.
All right. Hi, Mr. Kheruka. Good morning. And you've explained that beautifully to us. I recall in 2015-16, there was that pitch for MIP on steel, and that helped the industry big time. And this time around, you're making a pitch as well. A couple of questions on the MIP. What is the proposal you all have made to the centre with regard to MIP? By when do you expect to hear from them that amount of MIP? Because this will be an absolute number that you all have been rallying for. So if you could help us out with that.
So the date of the recommendation was the 5th of November, which was issued by the Ministry of Commerce. And they have 90 days in which they have to take a call. I mean, the Ministry of Finance. So that would mean the 5th of February, they need to take a call whether to accept, reject, or do whatever they want to do. It is their call. And yes, I believe that so far the indications we are getting is that they are going to be supporting it. But we have to wait and see.
What's the level, sir? Sir, what's the level, this anti-dumping duty that you're asking for? How much will it have to be? And also, please factor in the announcement that we just started with, that China, you're saying that the problem is China is giving way too much subsidy to its manufacturers, right? Now, I think that's come down to some extent. 13% export rebate has come down to 9%. Does that sort of help in any way? And what is the specific ask on duty?
By the way, the rebate of 13% has come down to 9% in the case of glass. It has come down to 0 in the case of aluminium.
Okay.
So now exporters of the aluminium frames will get no rebate at all, whereas they continue to get 9% in the case of glass. It's a matter of time and a matter of moment what China does, because the fact is that now this has nothing to do with me, but I do move around in certain circles, and the Chinese economy is not doing that well.
Yeah.
They have been reeling under shocks, and I don't think this is a secret. So the government is taking a very careful look on what they wish to do in terms of curbing expenditure and stopping subsidies and things like that. So if they feel that despite all the subsidies that they have given, a country like India has successfully been able to ramp up production and installed capacity already in modules, in cells, and so on, and going full strength ahead with glass as well, that the subsidies that they gave don't seem to have worked. And if they have not worked, then why should they bleed themselves dry, giving subsidies for products that in any case might face import resistance?
Right. Mr. Kheruka? Right. Mr. Kheruka, very quickly, your margins have improved on the standalone business from low single digits to around 18%. Very quickly, if you could tell us, will the standalone business improve from here? And the X of the standalone business, which will be your European business, when does that turn profitable? Because as of now, it's still, under big pressure.
So you see, it's like this. Let's separate the two things. If you're looking at our own business, the Indian business, a standalone business, we set up a new production line in January 2023. We've been running it for 18 months. In keeping with the Borosil tradition, we use our own technology. So we've been fine-tuning that furnace, fine-tuning the production capabilities. Let's look at the consumption of raw materials. From 37%, it's dropped down to 25%. Sorry, one second. Yeah, from 37%, it's dropped down to 25%. That is the value of raw materials used by us, and also fuel efficiencies and so on. So that's one part of that. That's one part of our effort. The second thing is, like I said, the quarter that just went by, we got a big bump up because of the rise in ocean freight. Now, ocean freight actually rose because shipping lines decided to withdraw the number of ships that were available in China for exports. because they were losing
Got it.
money at the prices at which they have been shipping. So there's a possibility that ocean freights will stay a little bit higher.
Okay.
And if they are a little bit higher, then that would help us. In terms of the environment with reference to China, we are quite hopeful about the imposition of the minimum import price. To give you an idea,
Mr.
the
Kheruka,
price which the government has seen is
Mr.
50. Yes.
Yeah, sorry, apologies. We just completely, if you can wind up that point quickly, sir. We're just sort of hitting the next thing. Could you, yeah, please go on. Just wrap up that point,
Yeah,
sir.
so 56,000 rupees a ton is the fair price which has been seen by the government of India. And the glass was coming in at 38,000. And then they dropped it to 28,000. So there is, it is completely senseless because the price of raw materials, these are international prices and they have not dropped. So if they are shipping glass at 28,000, which should be costing them 56,000, that's at half the price. Now, that's a straightforward government subsidy. And if we have a minimum import price, we are able to get the same price which we deserve and which is fair. Then in that case, it just does not matter at what price they export. So this should be a game changer if it comes through.
All right, we'll leave it there, Mr. Kheruka, and we'll talk to you once this comes in. 90 days from the 5th of November, 5th of Feb. In the next 3 months, we should probably hear something one way or the other. We'll take a quick commercial break here. We're going to come back more on the other side. There's 8 minutes to go for the pre-open.